Good morning. Thank you for joining today's daily webinar. We're going to ask the question today and answer the question about, can you really contribute 100% of your salary to a solo 401k plan? We're also going to go over your live questions here on the live chat. As always, you can follow the conversation on our community page, which is my solo401k.net/my community. Please like our YouTube channel and subscribe to it for more videos like this. We'll be live again today at 1 p.m. Pacific time as well as part of our two-a-day daily webinars. Looks like we've got a question here from Frank. So let's take a look at that. Question on producing 1099-R, all voluntary contributions. Is there a form I submit and my solo 401k produces for me? I found a solo 401k annual contribution form, but this form does not appear to have an option for entering voluntary contribution information. If yes, should I use this form? How to submit to my solo 401k? So you don't need to report contributions to us. Instead, those contributions are held inside the bank or brokerage account for the plan, and then you would report contributions on your tax return. Now, let's go to a page on our website that talks about reporting contributions. Let me share a page here with you. Let me go back to the right one here. Give me a moment here. All right, let's find the right page here. So here's a great resource from our website, reporting contributions. I'm going to click on that. So again, you don't need to complete any type of form to report contributions to us. Instead, you deposit those contributions directly to the solo 401k holding accounts, whether it's bank accounts or brokerage accounts. You then report those on your taxes. And this link here gives you a good breakdown as to how to report contributions, which is going to be based on how your self-employed business entity is taxed. For example, if your business is taxed as an S corporation, voluntary after-tax contributions are going to be reported in box 14 of the Form W-2. You're not required to report them there, but that's a place where if you choose to report them, that's where you report them. Because keep in mind that, and you probably already know this, voluntary after-tax contributions are made with after-tax funds, as the name implies, and therefore you don't get any tax deduction for that contribution. Once you make that voluntary after-tax contribution, you can then convert it to the Roth Solo 401k or the Roth IRA. And let's talk about how to report that. So if you want to, once you make that voluntary after-tax solo 401k contribution, you then need to decide if you're going to convert those voluntary after-tax solo 401k contributions to the Roth solo 401k or the Roth IRA. Most clients will convert them to the Roth solo 401k. So here's the online convert. It's an online form that you would fill out. And we have you fill out this form here so that we collect the necessary information to issue that Form 1099-R to report that conversion. So even though it's not taxable, that conversion does need to get reported to the government on a Form 1099-R. So once you've moved those funds from the voluntary after-tax solo 401k holding account to the Roth solo 401k holding account, you would fill out this online conversion form. And that's how we collect the necessary information to issue that Form 1099-R to you and to the IRS. Note that any conversions processed here in 2025 will not get reported to the IRS until 2026. So the Form 1099-R would get issued in 2026, January, February of 2026, for any amounts that you convert here in 2025. So this is the form you would fill out. Okay. If we have any other questions here. Here's another question here. I have a S Corp Solo 401k. The after-tax contributions into the Solo 401k, are they from the employer or employer? So when you make voluntary after-tax Solo 401k contributions, those are going to be based on your W-2 wages, box 1. So therefore, it's a dollar for dollar contribution. It's not an employer contribution, because employer contributions is a percentage based calculation. For an S corporation, it's 25%. That's the calculation for making voluntary after tax solo 401k contributions. Now, if you're talking about Roth solo 401k contributions, then those can be made as an employee Roth solo 401k contribution, which is a dollar for dollar calculation. And if you're talking about Roth solo 401k employer contributions, which are allowed resulting from Secure Act 2.0 regulations, that would be a percentage base. That would be 25% of your W-2 wages. So that's some good information to understand. Since we're on the S corporation topic, here's a good page from our website that talks about calculating contributions for a corporation, whether it's an S corp or C corporation. Here's a good chart that talks about how to report contributions. So let's take a look at that for a moment here. So you're going to see voluntary after-tax solo 401k contributions, as I mentioned earlier. They may be reported in box 14 of Form W-2. You're not required to report them. Now, if you make an employee Roth contribution, those are reported in box 12A of Form W-2 using code AA. And then you got to check off box 13, label retirement plan. Now, here's one here that's fairly new. Roth employer contributions. That's interesting because those are going to be reported as tax deductible on the Form 1120S, which is right up here. Let's see here. This little section here. Pre-tax Roth employer profit sharing contributions. They're reported on Form 1120S, line 17. So whether you make them as pre-tax employer contributions or Roth employer contributions, you still get that deduction on the S corporation side on the 1120S. However, if you make it as a Roth employer contribution, even though it's going to be deductible on the business side on the 1120S, it's going to be taxable on your personal side. where it's going to be treated as you having processed an in-plan pre-tax conversion, and therefore a Form 1099-R would need to be issued to report that taxable in-plan conversion. So yes, it's quirky. Okay, let's start talking about whether or not you can really contribute 100% of your salary to a solo 401k plan. Since we're on this S corporation page, we'll come back to it in a moment here, actually. Let's go to our main contribution page. So we're going to concentrate on tax year 2025 figures. Even though you technically still have time to open a solo 401k plan here in 2025 so that you can make contributions for tax year 2024. That's both employee and employer contributions for certain entity types, including the voluntary after-tax solo 401k contribution. For instance, if your business is taxed as an S corporation, you can open a solo 401k plan now, here in 2025, and make both employer contributions and voluntary after-tax contributions for 2024. You can do that by March 15, or if you file a business tax return extension for your S corporation, you would have an extra 6 months, all the way up until what, September 15 of this year in 2025 to make both voluntary after-tax and employer profit sharing contributions for 2024 to the solo 401k. So in short, it's not too late to open a solo 401k plan for tax year 2024 so that you can make contributions this year, specifically voluntary after-tax and employer contributions. So that's some good information. And of course, you would need to base those contributions for tax year 2024 on your earned income from 2024. So, yes, there's a way to contribute 100% of your salary to the solo 401k plan. And of course, you can't contribute more than you make, nor can you contribute more than the allowed overall limit for the year. For tax year 2025, the overall contribution limit is going to be $70,000. So you can't contribute more than $70,000 for tax year 2025. If your self-employed business is an LLC, taxed as an S corporation or an S corporation, for example, all you would need to do is pay yourself $70,000 in salary, so W-2 wages, and you could contribute that entire $70,000 as a voluntary after-tax solo 401k contribution, and then turn around and convert it to the Roth solo 401k plan. So that's one way of being able to contribute your entire salary. Of course, you're not going to get any type of tax deduction, but the trade-off is that you're going to be able to then convert that $70,000 in voluntary after-tax contributions over to the Roth solo 401k or to the Roth IRA. Now, let's suppose that instead of reporting $70,000, you report $77,500 of W-2 wages for your self-employed S corporation. You're going to be able to contribute that entire $77,500 to the solo 401k plan. Of course, you have to be age 50 or older to qualify for that extra $7,500 amount known as the catch-up contribution. Under that scenario, you would contribute the entire $70,000 as a voluntary after-tax solo 401k contribution. And then the $7,500, you can contribute that as a Roth solo 401k designated account contribution, or you can contribute that amount as an employee pre-tax contribution. You can never contribute the catch-up amount as a voluntary after-tax solo 401k contribution. That's not allowed, but that's really a moot point because you can choose to contribute that entire 7,500 directly to the Roth solo 401k. Because keep in mind, the sole purpose of the voluntary after-tax solo 401k contribution as part of what's dubbed as the mega backdoor Roth is to get more money eventually into that Roth solo 401k. So by making that $7,500 catch-up contribution directly to the Roth solo 401k account, you still end up at the same place. So that's how you're able to contribute 100% of your salary. Now, there's that new super catch-up amount of $11,250 for tax year 2025. And that's available. Let's go to that super catch-up page on our website. That's only available to a certain age group. If I can find that super. So I can shed some light on that. That super catch-up amount of $11,250. Here it is. So the super catch-up is available to those who are age 60, 61, 62, or 63 here in 2025. So it's not available for any prior years. So it applies to 2025 contributions and going forward. So again, today's topic is maximizing solo 401k contributions by contributing your entire salary from your self-employed business as a solo 401k contribution, and we're concentrating on tax year 2025. So if your self-employed business is taxed as an S corporation and you report $81,250 of W-2 wages for tax year 2025, so $70,000 plus $11,250, you're going to be able to contribute that entire $81,250 to your solo 401k. The scenario is as follows. You would contribute the $70,000 to the voluntary after-tax solo 401k holding account within the plan. So it would go to, if I can find that particular slide here. So here's an example of a one participant solo 401k plan. You're going to see that it's one plan. So let's say, for example, your self-employed business is an S corporation or an LLC taxed as an S corporation. That S corporation would sponsor the self-directed solo 401k plan. You're the only participant in the plan. The plan allows for both pre-tax solo 401k contributions, Roth solo 401k contributions, as well as voluntary after-tax solo 401k contributions. So that $70,000 contribution amount would flow to the voluntary after-tax solo 401k bucket, and then you would convert it over to the Roth solo 401k. Here's an example of a two-participant plan. If you and your spouse are both self-employed in the same business, let's say the S corporation, so the S corporation would sponsor the plan, and if you and your spouse both work in the business, then that would be a total of 6 holding accounts because you're required to segregate each spouse's funds and sources. So here are where the funds would be held in these separate bank or brokerage accounts. Now, going back to our super catch-up example, that $11,250, which again is for those who are age 60, 61, 62, or 63 in 2025, that would get contributed to the Roth solo 401k because you can never contribute a catch-up contribution, whether it's the 7,500 or the $11,250. That can never be contributed to the Roth, excuse me, to the voluntary after-tax bucket. So you would contribute that entire $11,250 to the Roth solo 401k bucket. So to this bucket here. Or if you want to make it as a pre-tax contribution, it would get deposited to the pre-tax solo 401k bucket. Now keep in mind that that catch-up contribution amount does not mean that you can also do another 7,500. So again, it's only for those who are age 60, 61, 62, or 63. Instead of contributing 7,500 as a catch-up, you can contribute $11,250, not both. Okay, so that's how that's how you can really contribute 100% of your salary to a solo 401k plan. Hopefully that gives you an idea. Let's see if we have any other questions here. Look, we have another question here from Frank. Let's take a look at that. Again, feel free to ask your questions here in the live chat. That's the purpose of these daily webinars, is for you to ask your questions. Again, we'll be back here again at 2 p.m. Pacific time. Or 1 p.m. Pacific time, excuse me. I made 2 voluntary contributions for 2024. Do I have to submit this form for each contribution? No, contributions don't need to be reported to us again, but if you do process the conversion where you make the voluntary after-tax solo 401k contribution, and then you convert it to the Roth solo 401k or Roth IRA, you just need to submit one online form to list the total amount converted during the year. Therefore, you can wait to submit that to us by the end of the year, because when you convert voluntary after-tax solo 401k funds, only one Form 1099-R gets issued to report all of the conversions processed during the year. So a Form 1099-R is not issued separately for each voluntary after-tax conversion. Okay, it looks like we have another question here. Thanks. I'm still a bit confused, so could you please help with the following scenario? Let's see here. My gross W-2 wages are 70,000 and net W-2 wages are 56,000. Now, if I make 23,500 employee contributions to the Roth Solo 401k, can I make the remaining 46,500 in after-tax contributions? Or after-tax contributions limited at 32,500, which is net W-2 wages. So number one, you can choose to solely make voluntary after-tax solo 401k contributions. You would need to pay yourself at least 70,000 of box one gross wages in order to contribute that entire $70,000 as a voluntary after-tax solo 401k contribution, because it's a dollar for dollar contribution. That's how the voluntary after-tax works when you're talking about an S corporation. So you need to take a look at your W-2 wages. Now, take a look at this here where it says that you may need to add amount listed in box 12A of your W-2 to box 1. So maybe that's why you're saying that your gross wages are 70,000, but net wages are 56,000. So again, the contributions are not based on net wages, they're based on gross wages, which is box 1 of the W-2. That box 1 is titled gross wages. So that's what you want to look at. So again, don't look at the net wages, look at the gross wages. So if you report at least 70,000 of gross wages, you're going to be able to contribute that entire 70,000 to the voluntary after-tax solo 401k bucket, and then convert it to the Roth solo 401k. If you choose to make, let's say you report 70,000 of W-2 wages, and you choose to make an employee pre-tax solo 401k contribution of 23,500, then you would reduce that amount from 70,000. So 70,000 minus 23,500 equals 46,500. And then you could contribute the remaining amount, that 46,500, to the voluntary after-tax solo 401k bucket, and then convert it to the Roth solo 401k. So that's an example of contributing on a pre-tax basis first, where you make an employee pre-tax solo 401k contribution of 23,000, or you can contribute it as a Roth solo 401k contribution. So you would contribute 23,500 to the Roth solo 401k bucket, and then the difference up to 70,000, which is 46,500, to the voluntary after-tax solo 401k bucket, and then convert it to the Roth solo 401k. So those are two different scenarios there for you. You get to the same place either way. All right. So looks like we are at the end of our time here. Again, thank you for joining today's daily webinar, where we discussed how you can really contribute 100% of your salary to a solo 401k plan. We'll be back here again at 1 p.m. Pacific time, and then take it from there. Have a great rest of the day.